World Economic Forum in Davos with Kevin Werbach, professor of legal studies and business ethics at Wharton University, and he is as well expert on emerging technologies and on the impact of development of emerging technologies such as blockchain, cryptocurrency, AI, big data, etc., on the business and policy implications. Great to have you here, Kevin.
Thank you.
So I saw you've been on so many panels here on the blockchain, on the regulations of cryptocurrency, etc. So can you tell how did you discover first this technology, and what was your first impression, and how, in your opinion, it matured over all these years?
Sure. I study emerging technology. I started my career 25, 30 years ago working on internet policy in the US government. And back then there were less than 50 million people in the world on the internet. And yet we could see the potential that it was going to transform society and business. And so throughout my career I've looked for other technologies early on that had that broad potential, that really could get to a point where they affected people all throughout the world. And when I found out about blockchain, originally then it was just Bitcoin, and realized the implications of this new structure for recording information, I came to the conclusion that it was the first thing I had seen since the internet that was potentially that important. The other thing that got me excited about blockchain was that at first I didn't understand it. I just couldn't figure out how can you have something that has the value of centralized control but while being decentralized. And so that was an intellectual challenge. And once I understood how the technology worked, that got me more excited about the potential. And again, that was very early on. That was more than 10 years ago now. And as it developed and matured and the industry has grown, as a legal scholar, I've been very interested in these questions about policy and regulation.
Yeah, so what countries do you see the most developed in terms of crypto regulations? We see now more and more states do some advancements. US has been quite rigorous to crypto always, but still I see many people see US like one of the top regulators. As for crypto?
Yeah, the issue is you don't necessarily need crypto-specific regulations to have a blockchain industry. So the US has not passed any laws at all, new laws, to deal with crypto. Many other jurisdictions have. The European Union has a comprehensive set of regulations called MiCA that are soon to go into effect. But many did before that: Japan, Korea, Singapore, including also many smaller jurisdictions that want to get business and economic activity in their territory because of crypto. So there are lots of countries with legal frameworks. But you also have to understand the context of where they are, and a big country like the United States is going to attract activity because the capital is there. And companies have been able to set up in the United States under the existing laws. It's just there's uncertainty about how exactly they apply.
And what are your thoughts on the establishment of a subcommittee on digital assets in the US? How will it help US to be more advanced in terms of crypto regulations? Will it attract more companies which fear to set up in the US to operate there?
That subcommittee is just a subcommittee of one congressional committee. So it's basically a recognition in the Congress and the legislature that these issues are important enough that they deserve their own subcommittee. But the legislation was happening and getting developed even before that. Really the most important step in the last 2 years in the United States was the executive order that the Biden administration put out in March of 2022, because that signaled that this was an important strategic issue for the United States and kicked off a series of reports and processes across the entire government, which really raised the profile of the issues.
So, and as well, what states in the US do you see the most advanced? Probably one of them is Wyoming. Any other developments in other states?
So again, it's hard to say most and least advanced because New York is where Wall Street is, and New York has all the capital, and it's not because New York in every way has the best regulation. And if New York is thinking about regulating, New York is thinking about regulating around an existing industry and protecting investors with that scale. So New York actually was one of the first. New York has something called the bit license that was introduced in 2015. Now the problem was it was too restrictive. And in fact, not even the regulation, but just the way it was enforced. They gave very few companies for a long time the ability to get that license. But they at least had a regime, which actually in hindsight looks a lot better than it did back then. Wyoming has probably been the most aggressive in terms of promoting blockchain, creating specialized laws, including things like a law to recognize DAOs, decentralized organizations, a law to authorize a narrow bank, a special kind of crypto bank. The problem is Wyoming's a tiny state, so I think the least populous US state. Companies can be located there legally, but everyone's not going to move everything to Wyoming. And Wyoming can only do what's in its own territory. So we really need federal action across the whole United States.
What are your thoughts about Colorado, Miami, Florida, as well Austin, since a lot of companies moving there?
Yeah, so you have to distinguish between states that pass legislation, like Wyoming. Colorado also has some legislation that they've passed. And we're starting to see more of that. Initially, it was a few states that were more excited about the technology. Now, New York, California, all the large states are realizing this is not going to go away. This is going to be an important industry sector, and so they're going through the process of developing legislation. But that's separate from promotional efforts. So we see a number of cities. Miami has been one of the most prominent, but even New York, the mayor of New York is taking his salary in Bitcoin. Those are symbolic things. There are a lot of crypto people who move to Florida, but a lot of that is there's no state taxes, and there's warm weather and beaches, and there's a crypto community that likes to hang out with each other there. So that's definitely happening, but that's distinct from the legal structure.
And you've been just presenting at Circle Lounge. So how do you see the coexistence or battle between stable coins and central bank digital currencies? We see now more and more countries explore it or launched already their pilots.
They're going to coexist. Central bank digital currencies are early on in development. Every major central bank is looking at them, but most of them are not going to deploy them anytime soon. Private stablecoins are already out there in the market, and I think that's going to be a big piece of it. Okay. We may need to go pretty soon anyway, so yeah, they're going to kick us out, yeah. We're going to go in a minute, yeah. Okay, so. All right.
Maybe continue from what you stopped.
Yeah, I think that was what I wanted to say about stablecoins. So.
Okay, and how do you generally see the development of this industry, and what do you expect from the side of regulators, and as well what measures should be taken for this industry to develop further?
The blockchain industry is going to continue to mature. I think we are starting to see established, successful companies realize that regulation is not the enemy, that you need regulation to promote trust and to prevent some of the kinds of abuses that we've seen. But there are still major players in the space who are effectively unregulated. They often say they're regulated, but they have no domicile. There's no country that really oversees them. So I think we're going to need to get to a point where that's not a big part of the industry. And you see that in global finance as well. Yes, there are offshore jurisdictions, but even they have regulation to protect against abuses. And all the capital doesn't flow there because the capital wants to be where there's a trusted environment. And so I think we're going to see that process. But we're also going to see the industry mature. The technology still has a long way to go. We see lots of interesting use cases, but scaling them up still has a long way to go. So I expect this is going to at some point integrate in different ways with the existing financial system. All that we can definitely see coming in the next few years.
And in terms of the market, what do we see? We now obviously in bear market, but within the last days we see some upside from the market. So do you see the crypto market still in a bearish zone for the next 1 or 2 years? Or what may be the turning point for the next bull run?
My concern is that crypto token markets are still not organic markets. And what that means is we know that there's massive concentration of holdings, especially things like Bitcoin. There are a small number of whales who have large amounts of assets, many of whom don't trade, they're hodlers. So there's not a lot of liquidity, which means small actions can have big impacts on the price. And then we know that some of these offshore actors like FTX were engaged in various kinds of manipulative behavior. We have indications that there have been other actions to push prices up and down. And that's true of Bitcoin. It's true even more so in many of these other coins, which are even smaller and less liquid and more concentrated. So that's what worries me, that I don't think you can look at prices of digital assets the same way you look at prices of traditional assets like stocks, because those are regulated markets, and this is not a regulated market globally, even if the trading venues in, say, the US and Europe and Asia are regulated. You can look at the prices, but I think we need to get to the point where we have a regulated market to really trust that they're meaningful.
Yeah, that's true. Thank you for interesting conversation and sharing your insights with us.
Thanks for having me.